Welcome back to another episode. Without wasting any time, let's jump straight into a quick analysis on gold and see if we can spot any solid opportunities to help us smash this 10K challenge. Alright, so looking at the chart, there's a strong chance that gold might keep pushing up, at least to this high right here at the top. The market structure is showing bullish momentum, and price seems to be respecting key levels. But hey, before we start counting profits that aren't in the account yet, let's not jump to any conclusions. Let's scale down to the 1-hour time frame and zoom in a bit. This will give us a clearer view of whether buyers still have the strength to push, or if sellers are waiting to catch everyone slipping. We're looking for clean price action, maybe a pullback into a demand zone or some kind of reaction that tells us, yep, it's time to enter. So let's break it down and see if we've got a setup worth taking, or if it's one of those situations where patience pays more than the entry button. So here's what we're seeing on the 1-hour time frame. Price is looking clean, textbook market structure. We're talking classic sequences of impulse, correction, impulse, correction. Then boom, another strong impulse, followed by another correction. It's like the market is breathing, each wave telling a story. And right now, price is sitting right in that correction phase. So what does that usually mean? Well, naturally, we might anticipate another leg down, another impulse to complete the sequence. That's where the average trader might go. Okay, cool, time to look for sells. But trading is not that simple. We don't just trade based on what usually happens. We need to understand context, momentum, trend strength, and market intention. The truth is, gold has been bullish for a long time. This recent downside movement might not be the beginning of a bearish phase. It could just be a deeper correction, a breather before the next big push to the upside. That's why we don't jump to conclusions. Instead, we gather clues. Now check this out. We've got our classic 1, 2, 3 touches on the trend line down here. And listen, when I see that forming, I'm already getting hyped. Because structure like this doesn't lie. It's a strong clue that price is respecting this level. First touch lays the foundation. Second touch confirms there's interest. And by the time the third touch comes into play, I'm already preparing for a potential setup. And here's the beauty of it. As price was pushing down, it came back to retest this support level right here. The same level where the third trendline touch is happening. That's a double confluence right there. Trendline respect and horizontal support lining up. When I start ticking boxes like that one by one, confidence starts to build. So yeah, it's safe to say I'm leaning toward buying opportunities. But not so fast. We're not entering just yet. Structure is good, but timing is everything. Let's zoom in to the 15-minute time frame and see if we can get a sniper entry. Alright, on the 15-minute chart, things start to get even more interesting. Price is moving up, yes, but not with strength. It's climbing in a slow, choppy, corrective fashion. And that's a very important thing to note. Because when price climbs like this, with no real impulse, it usually means buyers are hesitant, momentum is weak, and the move could break down at any time. But again, price doesn't move randomly. It moves with structure. So let me break this down for you. We've got our first touch here on the ascending channel, followed by a super clear second touch. Now, based on standard price action behavior, we can reasonably anticipate a third touch forming right here at the top. That's where our eyes should be. Now combine that with this. Right at that potential third touch area, we've also got a previous support level from the left-hand side of the chart. This is key because previous support, once broken, often turns into resistance. That's another powerful confluence. So here's the play I'm watching. Price pushes up into that resistance zone, completes the third touch on the ascending structure, and shows signs of rejection. If that happens, boom, I'm taking my first sell entry. But I'm not jumping in blind. I'll wait for proper confirmation, like a bearish engulfing candle, a fake-out wick, or even a break of a lower low on the smaller time frame. And the target for that trade? Simple. This low down here at our mark support zone. But don't forget, this isn't a bearish market. Not yet. Our overall bias is still bullish. This potential sell is just a counter-trend setup, short and quick. A tactical entry based on structure and momentum. So if price drops and hits our target support zone, we switch gears. We stop selling. We start watching for signs of a bullish reversal. And if you look closely, you'll see something special forming, a potential double bottom. That's a strong reversal signal. It tells us that sellers might be running out of steam, and buyers are starting to step back in. Combine that with our trend line and key support zone, and we've got ourselves a high probability buy setup. Now let me be crystal clear. I'm not saying this will definitely happen. I'm not in the business of making predictions. This is about preparation, not prediction. We let the market do its thing, and we respond accordingly. But if price follows the structure I've mapped out here, you better believe I'll be ready. Not hesitant, not emotional, just calm, confident execution. Because once you've put in the work, once the analysis makes sense, and once all your confluences are in place, you don't need to second guess. You just need the guts to press that button. That's how we grow accounts. That's how we become consistent. And that's how we inch closer to crushing this 10K challenge, one quality trade at a time.